equity as an asset class is volatile, and it will continue to be volatile. So volatility is the nature of the the underlying asset class which equities is all about. It's during these kind of times when you get an opportunity to buy into some very good quality businesses probably at a much reasonable valuations. So I think for the last 6 months we've been talking about this anticipated corrections, because mid caps were flying all through over the last calendar year, and markets actually had run up somewhat ahead of the fundamentals. Now that there's a pullback, I think for an investor with who has a medium term perspective of 3 years and onwards, I think this is a very good time to invest into some good quality businesses. So we're using this as an opportunity to put whatever cash we have to work.
Pankaj, if one were to talk beyond the index, which appears only 10% odd correction, but if one were to look at the BSE 500 companies, easily, big names, $1 billion market cap kind of names are down 25-30%. Some stocks, larger. In fact, why only BSE 500? Tata Motor is down 47% from the recent high. So clearly, price erosion has happened. Talk to us about the kind of stocks you have on your list, on your buying list, which you have started to buy, or perhaps are looking at buying, if not names, at least themes or plays where earnings cushion is there. It's just the environment is leading to price correction.
Yeah, so we're seeing significant opportunities of growth in a lot of sectors. For example, we've been liking the healthcare space in particular for some time, and especially within that the contract research space, because we think clearly some of the Indian companies have got to a stage where over the next, let's say 5 years or 7 years, they'll emerge as the leading CRAMS companies from Asia, and they are doing pretty steady growth, and these are very high quality businesses. So healthcare and CRAMS in particular is something which we started liking for some time, and we continue to own them. There are other pockets of growth in the economy as well. Infra capex has been doing well, largely driven by the government investments. But of late, what we've started also witnessing is there's an uptick in the industrial capex. So companies across the capital goods sector which are exposed to the industrial capex are something which looks pretty interesting to us from a slightly more medium term to longer term perspective. So these are the kind of stocks we are liking, apart from the fact that we do think for a medium to longer term perspective we do see value in corporate banks as well. So that's where we are putting our money on.
All right. Interesting names, healthcare, etc. Pankaj, I just want to know that at this point of time, we have on one side global risks emanating from the uncertainties as to what sort of policies White House will come out with. Is there going to be a trade war of sorts, and what kind of a victim, how would that victimize India? And on the other side, you have elections that are coming by, in India. So that as well is going to create a lot of uncertainty. How should one essentially, especially retail investors, how should they position themselves? Should they keep higher cash levels?
Well, the best thing a retail investor or any value investor should do during these times is just cut himself off from all the noise that's around, because there will be some noise or other at all points of time, and it's during points of during times of such uncertainty is when you find the highest value in the market. So I think long-term investors should look at businesses on a bottoms-up basis, and wherever they find value and growth over a medium term to longer term, they should invest. So I think these are times where you go out in the market, you look at businesses, and wherever you find reasonable value, you should put money to work rather than sitting on cash. So I think this is actually a time to put cash to work rather than holding on to cash. As far as global headwinds are concerned, I think it's slightly early to talk about trade wars. I understand where you're coming from, that US has taken some decisions in terms of raising duties on imports of certain specific metals and some other products, but I think it's still a bit too early and a bit too far-fetched to believe that that will translate into a full-fledged trade war, because I believe that US still understands that it will have repercussions on US economy as well. It's not going to be a one-side street where they can keep imposing duties and taxes or trade embargoes, and the other countries will not respond to it. So I think the way it works with politicians is they talk a lot and there's a lot of rhetoric, but we should focus on what they're actually doing rather than what they're talking. So I think it's still slightly early in my mind.
It's two spaces. One is upstream oil companies. What is your call there? A lot of people, if they are underowned, clearly names like ONGC and all have started perking up. Do you think that could be a positional play? And the other sector I would like your opinion on is the real estate sector. We are getting a sense, talking to some large players, is that the smaller players are getting weeded out and they are not even being able to operate after RERA, the environment change, and hence a lot of consolidation of opportunity is happening for larger players. So what are your thoughts there? Is it investment grade yet?
I think real estate from my equity investors perspective as a sector always was pretty challenging to invest in because there were a lot of corporate governance issues with the sector. But I think with the new regulation in place, I see over a longer term significant opportunities in the real estate sector will emerge for public market investors. Meaning, just to give you a perspective, if you look at global markets, real estates are something like between 5 and 10% of the total market cap. In India, the irony is, if you look at real estate as a sector, then it's something like about 9% of GDP. But yet, from a capital markets or stock markets perspective, the aggregate market cap of all real estate companies is less than 2% of the market cap. So I think this dichotomy at some point of time will get bridged. As you rightly said, there is significant consolidation that will happen in the sector over the next few years, and probably the standards of corporate governance will improve significantly, and that will throw up a lot of opportunities for investors to invest into. So I think while real estate stocks did move pretty sharply over the last year, but I think for a longer term investor, I think significant opportunities will emerge in the real estate sector, because the fact remains that real estate still accounts for over 30% of household savings in India. So that's as far as real estate is concerned. As far as upstream oil and gas is concerned, no, we are not too excited about it at this point of time, because the bigger problem we have is we see significant capital misallocation by the upstream oil and gas companies in India. So apart from the delta you get on earnings from the higher oil prices, I think we have concerns on the capital allocations of these upstream companies.
All right, Pankaj, we leave it at that. Thanks so much for joining us and giving our viewers a sense of what you're doing with the markets at the current juncture.